So there's two ways to trade the 15-minute opening range. You've got the orb and playing within the range. For the first one, the orb, the opening range breakout, there's two things that you want to take into consideration before even deciding to trade the opening range breakout. First one being, have we been in a range? So we'll look right here, zoom out for a little bit. So as you can see here, we've been in a little bit of a consolidation right here. It's like a little bit of a channel. Ideally, you want it to be like a flat consolidation, but any type of consolidation breakout that's a check for the orb. The main thing that you want to take into consideration before deciding to trade the orb is the context of the market. The technicals will not matter if the context doesn't align with the technicals. And this applies for any strategy, but especially if you're going to trade the opening range breakout. Just because it's breaking out of a range doesn't mean it's going to take off and then go to all-time highs or whatever. If there's uncertainty before news like FOMC or CPI or whatever earnings, and we're breaking out of that range, it could just as easily at any given time flush back inside the opening range and then you get stopped out. We obviously don't want to get stopped out. So you want to make sure that there's some type of catalyst, like either whether it be news or anticipate like positive, any type of positive sentiment for a bullish orb or a bearish orb with a negative sentiment. Those are usually the times where you want to play the orb. If the context doesn't align with the potential breakout, like uncertainty before news, whatever, it most likely won't have that breakout and you most likely get stopped out. So the checklist is does the context fit for a potential orb? Is it breaking out of a range? Or have we already had a big move overnight that could have been based off news, or we've been selling off? So say, for example, December 18th, we'll go back to there. I'll show you. This is a prime example of a great orb that wasn't in a range, but from a major news catalyst. December 18th, we had FOMC. Powell said he wasn't going to do more than 2 cuts next year, which is now this year. And the market didn't like that at all. So we flushed. Next day, we came back up a little bit, grinded again, flushed. And then what happened here? Friday, we had a short squeeze. So also, if you guys are finding this video helpful so far, make sure to leave a like, comment, subscribe, all that good stuff. Let's get back into it. Right here, we sold off a lot. Market opens, green 15-minute candle. Then this next one was red. And you could have said, oh, why didn't you just take the orb here? The reason why I would not have taken the orb there is because it's the opposite of this previous candle right here. This is the bearish candle. So there's a little bit of confliction there. And we've already had a major sell-off for the past 2 days. That would pretty much, it could have gone either way. This easily could have flushed and continued down further. But to me, there was too many buyers in the market. Too many shorts had to cover. It was a Friday. This was almost bound to be a beautiful orb breakout to the upside. So you had the failure to go lower here. Another great confirmation, because they say there's nothing more bullish than a failed bearish pattern. And there's nothing more bearish than a failed bullish pattern. So we had a failed bearish pattern here. We didn't close through the orb, push back up, and then this one just exploded on through. I would pull this up on the smaller time frame, but I don't think the 2-minute lets me go back this far. So we're going to keep it right here. So we pushed up, squeezed, beautiful orb. Fridays, I'd say, are one of the best days to play the orb, especially if we've had a big move or a big sell-off or a big pump up from the previous days going into that Friday. So there's the context. The context was FOMC news bad. We flushed lower, lower, lower. Friday, shorts had to cover. Short squeeze. Boom. So that was the other one. Breaking out of a range with alignment with the context, with a news catalyst to make it really boom. Or if we already had a big move, say to the downside, for example, that was either caused by news or just overall selling off, Friday is a good day for an orb short squeeze to the upside. Now, obviously, you could play the orb to the downside, but that's just for this example, to the upside. Personally, I like playing within the first 2 15-minute candles for an orb, because if it doesn't happen within the first half hour, it might just grind down, or you could get stopped out before it really flushes down in the afternoon. So for me, my favorite time to play the orb is within the first half hour to 45 minutes of market open, or even within the first hour, because that's when you get the most volume between 9 and 11:30. That's where the biggest moves happen, in my opinion, outside of like FOMC days, or if we get news in the afternoon. Number 2 is playing the range. So now back to what I said in the beginning. If there's uncertainty before news, and you take that context into consideration before trying to get a home run trade to run like 300-400 points, that's far less likely to happen on a news day, on a no news day. Here, this was a perfect one. So as you can see, we had that big move from the news. I'm going to assume something happened pre-market, 8:30, whatever, or just random bullish breakout. But then we flushed down here. This is about a 50% retracement from this move. Failed to go higher, pushed up, and then couldn't go lower here. Like, we went a little bit lower, but then pushed right back up again. And then you could have ridden this all the way to the top here, but what I do on range days, I only really take it to about like 50% if I'm entering at the bottom to ride to the top, unless the price action looks good for it to really push back up to the top of the orb. That's when I'll maybe consider going to the top, but I'll most likely either get stopped out trailing it or just setting my TP halfway through, because I'm happy with like a 30-40 point move on a range day. Range days, you just go for the base hits, guys. Only go for base hits on range days. Don't get greedy. You could easily get reversed on, easily get stopped out, easily tilt, easily say GG's to your accounts, and we don't want to do that. So now, what if you missed this bounce? What if you thought it was going to go lower and it just kept pushing back up and you couldn't find an entry? Right here. Here's another one. We'll take out Mr. Circle just to circle it. Boom, boom. Oh, that's a little too big. So we're going to shrink that right about there. Move that to the side. Perfect. Okay. So what do we have here? We have an inverse hammer candle, and we made a lower low, and we rejected the orb. Perfect bearish pattern. As soon as we broke the low of this candle, I would have gotten in. And even if you could have just sold on this first, like if you were just trying to take a quick scalp, somewhat of a counter trend trade, you could have easily just gotten out on the same candle. Because the high of it was, say you entered below the low of this one, 650. Say you entered 649. This went down to 628. That's solid. We're only going for base hits here. Or you could have even held it through this grind, but this is a 15-minute time frame, so it would have been a long hold. But this was a solid trade. Solid 20, 30-point trade. Not bad. Me personally, I really try to just stay on the 15-minute time frames unless I'm trailing with momentum on the 2-minute chart. Or I'll use the EMAs to decide whether or not I should hold or cut it if it hasn't hit my TP yet. But that's for another video. I'm solely focused on the orb today, but this was a nice rejection spot. You could have entered long here to play the range or entered short here to play the range. Now, sure, I might be cherry picking here because it's just, this is like one day. And then here, chop that around a little bit. The orb is just a nice tool to use. Like, you don't have to solely predicate your way of trading based on the 15-minute opening range candle. But it's these two levels, the top and the bottom of the 15-minute opening range, are just so nice to use as levels of reference to be able to place trades. You always want to have trade entries near or at the levels. Because if you're entering a trade like right up in here, like say you wanted to go long, you wanted to see the breakout continuation, you're like, it's going to go higher, flushed. Or if you're like, all right, we should go lower from here, slurp, bought right back up again. So these are very important things to keep in mind, guys. Trading can be very nuanced. When you find certainty in the uncertainty, it makes it a lot easier to trade and makes you that much more certain in your trading, in your strategy, and your ability to consistently be a profitable trader.